To build anything that truly lasts, it takes time.
TCS as well as HCL Technologies, Neeraj, it seems like IT is going to be an avoid this quarter too.
Yeah, good morning. Yeah, definitely the beginning of the result season for IT has not been good. And it was as on expected lines because we're not expecting good results from IT this quarter. And even the immediate outlook is not that clear. So I think one should wait to get more clarity. One, what is going to happen on the earnings front, and second, what clues we have from US regarding business going ahead. So I think one should really wait and see how it goes. And as far as the large cap party is concerned, there is TCS, Infosys. If they basically consolidate in this region and stop correcting, maybe it's not a good idea to sell them also at this point. I think one should hold on to them to get more clarity or start accumulating.
Okay, that's the take on IT. But Neeraj, hi, morning. Lots is happening in the pharma space. You have some stock-specific action from Zydus Life, a positive news flow coming in for Zydus as well as Biocon for their diabetes drug Kirsty. Other than that, you also have some commentary coming in from Trump where he's saying that pharma tariffs could be announced as soon as the end of this month. What's your take on the sector? And for our viewers who are invested in the sector right now, given there is so much uncertainty on the tariff front, how should they be positioning themselves?
Yeah, good morning. Actually, as far as the tariffs is concerned, there are two things. One, he's been speaking about pharma tariff for quite some time. Off and on, he comes out with statement that they're going to come, there will be heavy tariffs. But then, market has reacted, but not reacted too much. And again, the stocks have been doing well. Second, then there are these country-specific deals. There's still no clarity whether, if you have a country-specific deal, still there'll be separate tariffs for all industries. Then what is the idea to have a country-specific deal? So there's a lot of confusion as far as tariffs is concerned as of now. So I don't think the stocks will react too much. For an investor, it will be best to just invest in the stocks we like and stay invested in them as far as pharma is concerned. Pharma has been a stock-specific bet, and you can't really invest across, and because that is now the stocks are not that cheap. They are quite fairly valued. You'll get pockets there. You'll get stocks which are doing very well, and they, stock-specific moves will come. Like you saw a move in some pharma stocks yesterday. So I think one should stay invested in the one you are betting on, and then let's see how it goes as far as the tariffs are concerned.
Neeraj, is there merit in looking at the two-wheeler space right now? I mean, yesterday the entire pack was fairly charged up. We've seen an early onset of monsoon as well. The distribution so far as well pretty much seems to be on course. Do you think that's going to reflect in the two-wheeler numbers?
Yeah, I think so because the bigger companies, Hero Motor and Bajaj Auto. Hero Motor came out with some statement yesterday. So they are going to be aggressive and they are looking at growth going ahead. So, we've seen post the monsoon, if we have a good monsoon, there's definitely a pickup in demand in the two-wheeler space. So now, going ahead also because inflation is low, you have, excess liquidity in the system and, you're going to have a good monsoon. So all that will augur well for the sector. I think Hero Motor is also trading at discount to its long-term averages. So at this price, getting into Hero Motor for a long-term investor should make sense. And similarly with Bajaj Auto also. The Bajaj Auto, we yet to see some improvement happening there. Or let's see the results how they come this quarter and then take a call for Bajaj Auto. I think Hero Motor definitely at the prices they're quoting at 20 times historical and Bajaj Auto close to 30 times historical. 12 months trailing, they're attractive valuations. So I think one should consider them for long-term investing.
Okay, so those are some stocks that Neeraj is liking from the two-wheeler space. But Chandan, before we let you go, just give us your sense on the entire metal space. yesterday because it was the least gaining sector yesterday, and some of the steel stocks, particularly JSW, Jindal, Tata Steel, all of them were under deep pressure yesterday. What's your take on some of these steel counters on the charts?
Yeah, so Nifty Metal Index has been consolidating or taking support at 50-day exponential moving average. The weakness is not visible, but again, at the same time, the follow-up and momentum is missing in the entire sector. The index has been consolidating in a narrow range. In fact, from last 4 trading sessions, and most of the heavyweights counter are witnessing sustained call writing at higher strike. So just to reply on JSW Steel, it has been consolidating in a range, but supports are intact. In fact, even after the absence of buying interest, we have noticed some put writing at lower strike. So I believe 1010 could act as a support for a bounce towards 1065 kind of level. So that will be the tradable trading range for JSW Steel. Looking at the Tata Steel, it has seen a corrective move from 169 to 158 level, and from last 4 to 5 days, multiple supports are visible at the lower trading band. So I believe with support of 155, it can witness a positive to range bound bias towards 165 kind of level. So most of the metal name, or in fact the metal index, has been consolidating, and we believe that such more consolidation could continue for next coming days.
Right. Okay, Chandan, we'll let you go on that note. Thanks as always for taking the time out. The entire insurance pack also, and especially general insurance, is also going to be in focus on the back of those new IRDAI norms. But Neeraj, insurance really, in terms of the stock market moves, has been a non-starter, barring a few odd, flips that one has seen here and there. What is your take on how insurance should be looked at? As structural a story as it may be, the stocks haven't performed at all.
Yeah, actually, you're right. It's a structural story where, few years back, 5-6 years back, everyone was believing in the story to be a good value generator. But, I think everyone got invested also. You see, long-term portfolios, they're holding on to some good insurance stock. Funds have been holding on to them. But, that follow-up big buying is not coming because there's no exceptional gain which comes specifically from life insurance companies. So life insurance companies have been a drag, and I think going ahead, they can be, maybe you can get you're looking at a 10-12% kind of a return. You can still get that kind of return in this sector. But general insurance is one where I think still there is good scope. There can be growth which can come there, and we've seen those companies doing better also. So if I have to pick one of the two, I'll pick general insurance. But I think I would still be very neutral on this sector.
Okay, so neutral on insurance, but amid that, liking general insurance, that's the view coming in. Well, let's get you a better sense on what these new norms are. And IRDAI has formed special panels with whole-time members to review the violations by insurers as well as intermediaries. At its 132nd board meet, IRDAI also approved norms for rural social sector and motor third-party obligations for FY 25 to 26 and 26 to 27. Let's take it across to my colleague Anurag, who tracks the sector very closely to get us better details on this.
So, ET Now news break got confirmed about R1 license to Kiwi General Insurance. As per the IRDA press release in a board meeting, IRDA has approved initial stage license, R1 license to the Kiwi General Insurance, which is promoted by Westbridge Capital and Nilesh Garg. So company can start setting up their offices before their final approval under the R2 license. Other than that, the big announcement is related to the IRDA's social, rural and third-party obligation. So, 25,000 gram panchayat need to be covered by the insurance industry, but number of lives in these gram panchayat has been increased from 10%. So, for FY26 and FY27, insurance industry need to cover more than 10% of their overall premium in motor insurance, health insurance, property insurance from these 25,000 gram panchayat. This is mainly to focus to increase penetration in rural areas, in rural villages. Other than that, other announcement is related to the risk-based capital framework. So now second quantitative impact study has been launched by IRDA for the risk-based capital, and insurers have to comply in next 2-3 months. The panel has been formed to review violations by insurers and insurance intermediaries. The panel will be of whole-time member of IRDA. Other than that, a separate panel to handle the share transfer and specific application related to the approvals. So these are the main highlights of 132nd board meeting of IRDA, which happened on 14th of July.
Right, okay, that's that on the insurance place. So look out for what the likes of a GICRE or for that matter a New India Assurance as well are going to be doing in trade today. The general insurance place, that is. For HDFC Life, like we said, you know, the Q1 has turned out to be a little bit of a mixed bag. While the numbers look optically okay, they've managed to miss what the street was penciling in or working with in terms of a figure. The VNB margins have come in flat on a year-on-year basis. For ICICI Lombard, though, the Q1 profit has grown about 28%. It's come in at about 747 odd crore rupees. So those numbers look quite okay. Brigade Enterprises, that's the other stock which is also going to be in focus today. Their subsidiary is looking to set up a pre-eminent center in Hyderabad, and it's a sizable land parcel development that one is being is being talked about. Neeraj, how are you mapping the entire realty play? These stocks have begun their move about a month and a half back or so. So that's looking good. But within realty, what are your preferences?
In real estate space also, you've seen that the environment has improved for them, with the interest rates, liquidity, RBI measures. So they're definitely improved. But, because especially in the north, when we see the prices that run up so much that, there's some consolidation which is happening at these levels. So that, that increased demand, which was visible, I think, last year, is not visible right now. There's a possibility that, in the quarter or so closer to the festive season, demand may pick up. But then one should pick up the stock which have good potential for a longer term, because short term I'm still not sure whether how much they can run if the demand doesn't come up by this festival season. So that needs to be watched for the next 3-4 months. And besides that, like you have names in the north, something like a Max Estate, which I've been positive on. They've been coming out with projects, and they've been sort of executing them quite well. So that company is a smaller company, which is on the lines they have been growing as per what they have been projecting. And DLF again, they have launched the kind of target they gave last year. They were easily achieved. This year also, the target that they've given for the pre-sale should be easily achieved with the kind of launch that they had for a couple of projects. Now they're launching project in Bombay also. So they definitely demand, but then that too much of optimism that was there earlier, not seen right now. So I think next 2-3 months will give a better view of that.
Okay, so that's the take on the real estate space on the fundamentals. But we also have Rajesh Palvia, who's joining us from Axis Securities. Rajesh, hi, morning, and good to chat with you this morning. Neeraj was just talking about the real estate sector on the fundamentals, but there's one stock that is in focus. It has been in focus yesterday, and that's Oberoi Realty.
And M&M, of course, which also looked quite okay. Neeraj, we were just chatting about the EV landscape on the sidelines of the fact that Tesla has finally made its way into India, opening its showroom just yesterday. Wanted to understand, who do you think is going to win the EV race? Because so far it seems like it's clearly M&M all the way.
Yeah, I think M&M has done a very good job there. They'll continue because, even though Tesla has come in, they've come into the very high-priced car to start with, the model which they will launch also. Will not be able to match the price which M&M is, or even Tata Motors have been able to deliver. So I think M&M will continue doing that as far as the four-wheeler space is concerned. The two-wheelers, I think it will be fragmented. I don't think there'll be any one winner there like you've seen Mahindra in the four-wheeler space. I think it'll be across the big companies and the new entrants. So two-wheeler space will be more spread out. But I think M&M is still a company which the portfolio stock. If you at any price you entered in the last couple of years, also the stock is giving you decent return. I think that should continue be the case for M&M with the EV launches, and even besides that, also as far as commercial vehicles is concerned, there also I think there is going to be an uptick which will happen because of construction activity picking up and execution picking up. So M&M should be there in your list as far as investment is concerned.
Okay, so that's the take on autos. And in fact, yesterday Nifty Auto was the best performing sector. That sector has done very well, led by Hero Moto, and other stocks were also buzzing from that sector. Rudra, while we were chatting in the morning, you held the view that Hero Moto, even at these levels, could look good as a buy given the 4 to 5% run up that we've already seen yesterday. Other than Hero Moto, what are you liking from the entire auto pack, and would M&M after the recent run up still make it to your buy list?
See, for me, definitely from four-wheeler, if I have to buy a stock, I will have high preference and my top pick will be Mahindra and Mahindra. And if you see the chart patterns, yes, there has been a strong support at levels closer to that 2050 zone, and it is consolidating now for last 3 months. So yes, stock is ready for higher move and stock is ready for a momentous move, and it will cross these levels of 2750, which has been a recent high which it has made. So for me, yes, buy at current market price. 3750 is what I will be looking for as a target for M&M. But initially, yes, the support at around 3050 has to be held for that. So I will be buyer in M&M at current market price. Keep a stop loss of around 3000 and look at targets of 3500, 3700 to come on M&M. Strong buy definitely on M&M.
Okay, that's a strong buy coming in on M&M. Just looking at some of the other movers as well, and there are a bunch of stocks that are going to be reacting to their numbers. Of course, Biocon, which has now expanded its diabetic portfolio. There's Dixon Tech as well, which has acquired a 50% with one of the JT partners. There's ICICI Lombard, which has come out with its earnings, and it's a steady Q1 that they have delivered. So look out for what these stocks do in trade. And then, of course, there's Lemon Tree as well, which has opened another hotel in Tamil Nadu. It's their 6th property in the state. So that's the other segment which is also going to be in focus. But Neeraj, given that we've just about started the earnings season and IT has been a sheer disappointment, wanted to understand where do you think the positive surprises are going to come in from?
I think banking and NBFC space is one where I think you can get some positive surprises because the balance sheets are quite good, and they would have seen some pickup in the demand for credit in the last quarter, or at least in June. So this is one segment which besides this capital goods space, infrastructure space, I think one will be interesting to see what kind of order win they've got in this quarter, though the execution will pick up towards the second half of the year. But at least the order wins and the order books will be important to look at. So these and even the metal and mining space is one where I think that is also, I think you will see some improvement happening there. So these are the kind of sectors I'm looking at, mostly domestic focus. I think there you may see improvement, in financials and even the infrastructure, capital good, this space.
But Neeraj, when it comes to private banks and wherein you are expecting positive surprises, is it not already factored into the stock prices? Because most of these names are practically sitting at their all-time highs.
Yeah, you're absolutely right. The large private sector bank, where they have done very well. But, you've seen HDFC have been consolidating now around these levels. So I'm more positive on the PSU banks than the smaller banks. I think there, you haven't seen the kind of rally PSU banks deserve to see the kind of valuation they're trading at. So I would be more positive on the PSU banks. And I think that definitely you'll see stronger numbers from some of these large private sector banks like ICICI Bank, HDFC Bank. But if I have to pick for investment, I think PSU banks are better placed.
Right. Okay, time to get into mid-cap trading ideas as well then. Rajesh, let's start off with you. What's on your list?
So first stock is from the chemical basket, that is SRF. Stock is almost trading near to its all-time high trajectory, and we have witnessed, buying action in most of the chemical stock in last couple of trading session. Looking at the structure for SRF, we believe that this momentum can extend further and possible target towards 30